The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen. Thank you for being with me today. And it's good morning to our friends down in the Hunter Valley. And just good afternoon for our friends across the ditch in New Zealand. Yes, Hank, thank you. Great to see some rain. Australia, east coast of Australia, Queensland, New South Wales, northern Victoria having a terrible drought. It's really bad, tough, very tough. And we've actually starting to see a bit of rain. Hasn't gone inland where they need it most, but every little bit's a help. So Hank's down in the Hunter Valley. It's been very, very badly hit, I should say. So that's great. Now, folks, can you all hear me? Yes, Ed, thank you. Ed's already being the mind reader that he is. Ed's a very famous artist. He's on the west coast of the US. And he anticipated what I was going to say by saying that the sound is good, which is terrific. Kevin, too much rain in Minnesota. Well, yeah. Thanks, Mike. Thanks, Kevin. Well, yeah. Well, yes, I know you guys are at the other end of the spectrum there, but boy, we needed some here. It's the start of spring. Nice little drop with thunderstorms where we are. At the Gold Coast, which is Australia's version of Miami. Margot Robbie, the actress, was played in The Joker and I, Tonya and Wolf of Wall Street. She's a Gold Coast girl, Margot. And she says that she loves thunderstorms. She says Gold Coast has the best thunderstorms in the world. So I guess she would know. Okay, so good to have you all here with us, folks. Look, I'm surprised you all turned up today because I thought you might have all been exhausted from counting your money. Boy, oh boy, what a week it's been. It's just been terrific. Just enormous. Albert Z, yes, about time we got together again, Albert. Albert's doing a tutorial. Good to have you with us. Chase, my smoking nemesis. I'm trying, Chase, I promise you. David Webby, the king of the black lines. Dean, he's a tutorial guy, done two actually. Ed is over, he's a very famous artist I told you about on the west coast of America. Fiona, lovely to have you with us. We don't have many ladies here with us, Fiona. The ones we do have, I can tell you, some of them are our very best traders. Sister Sage, who's very, very ill at the moment. We send her our love and our prayers. Janet up in Canada. Sue up in Cairns. They're our very, very best traders. Interesting thing about ladies as traders, when I teach them, they do exactly what I've taught them and nothing else. Whereas a lot of you blokes, even the ones that I've taught, you tend to find other things, don't you, Dean? And you start to invent things which you should never do. The Daniel Code's as perfect as human hands can make it at the moment, and will continue to get better. Look, Sue's here now talking about lady traders. Nice to have you with us. Late arrival, just arrived. Sue's over in the, I'm going to say Montana. She's in the middle of, well, she's toward the end of doing a tutorial. She's just having trouble finding the time to get her paper trading. I don't know. Cleveland. Okay. Cleveland. Okay. I thought you were in Montana. Anyway, she's in Cleveland. Good to have you with us, Sue. I hope you're doing that paper trading for me. Okay, let's keep going, guys. I was welcoming Fiona. Hank's with us. Harold in Reading. Yeah, Harold will be thrilled today. Gold had a big up day. Harold's a gold bull, a real perma bull. With interesting day trading in the metals. Harold wasn't it because I had sell signal for gold and a buy signal for silver, which just shows you how finely balanced the market was. Anyway, it resolved itself to the upside. So gold's had a huge breakout. Very good. Got rid of all that horrible consolidation it's been doing. Jeff with us, he's tutorial guy. Good to have you with us. John from Coffs Harbour. He was in the UK a week ago. You don't know if you're home yet, John, or what, but glad, good to have you with us. Kevin, the tutorial guy. Mark, the tutorial guy, he's got a very good trader. Marvino, good to have him. Michael Pell, our travelling wonder man. Good on you, mate. Mike Murphy, he's a star trader. You see a post from Mike on the front page of the Daniel Code. He was, last we heard from him, he was up 8 times, 800% on his account. Very good. Neil, he's a new guy doing a tutorial. I hope you got some rain, mate. Neil's a cotton farmer up north of here. Need the rain desperately. Good to have all of you with us. Peter, thanks for being with us. Boy, big turn up today, I'll tell you. Oh, Sue's with us. Sue from Cairns is with us. I was just talking about you, Sue, saying that ladies make the best traders because they just do as I teach them. They don't go inventing things like some of the guys can find things. So good to have you with us. I hope the trading's still going just as well as it was. Tom's wealth fund manager in Florida. I guess you're getting a ton of rain down there, Tom. What a dreadful storm that was that went through the panhandle there. Terrible. Anyway, and Tom Tom Risky's a home builder in Aspen. He's going to get around to doing a tutorial pretty soon. Tom, where do you see the money from this week? Woohoo! Yeah, John's back home in Coffs Harbour. Great. Akshay, the volume here is good. If you can't turn it up anymore, whatever you miss, good to have you with us. Whatever you miss, have a look at the recording, which we'll post this evening, presumably, depending on what Terry's movements are. If not, it'll be posted in the morning. Anyway, move on, folks. We've got lots of stuff to talk about. Boy, oh boy, what a week of trading, isn't it? Wonderful. Okay, so let's have a look at this idea that markets are whispering. It's really interesting to me, and I've said this many, many times. A lot of you who've been with us a long time will know about it. So often we get a signal before an event, before a Fed announcement or a political event, and the market seems to know, and you can either rationalize that as saying, well, they're just more than half of the trading world are crooks, and they've got inside information, which is in theory, at least, it's illegal. But that's one view that the smarties know. They always know first. They know before we do. But a better view, and the view I espouse, because this happens so often across so many markets, is that this is the market whispering, and I really enjoy it when I see something in the markets, and then next day the news comes out and says, oh, well, the market knew that. So this particular piece today, in the first part of our discussion, I'm going to talk to you about Brexit, which is code for Brexit, for Britain exiting the European Union. Now, the European Union is just a bureaucratic monolith. Its original purpose really was to try and stop Germany after the 2 world wars, stop Germany dominating Europe and becoming aggressive. And it's started off as a coal and steel union, trading union, and expanded to cover everything. And now it's social and economic and everything except they have the euro. That's the one currency for the eurozone, but they haven't actually merged their central banks yet. The major countries still have a huge degree of independence with their fiscal settings. So after 40 years, Britain got to the stage that they were so sick of being ruled from the Europe, from Brussels. There's an EU Parliament. In fact, there's two, because they couldn't agree where it is. So they had the main one at Strasbourg and then Brussels. So they've got two. Got another one. The whole 150,000 bureaucrats move every 6 months. I don't know how the detail of it is, but it's about as dysfunctional as you'd expect from trying to meld together Britain and Germany and France and Italy and Spain and think of all the little Baltic countries as well. Anyway, so a couple of years ago, David Cameron, who was the then Prime Minister of England, and who I had high regard for, I thought he was the real deal. He had a rush of blood. He had getting so much criticism from his backbenchers about not liking Europe and having to abide by some of the rules and regulations. And it's all encompassing. It pervades every aspect of business and social life. That he was confident enough to say, well, let's have a referendum on it. Very confident that the British public would vote to remain. They're the two sides. The vote was either leave the EU, or remain. And him and all the bureaucrats and pollies were confident remain would win. And in fact, excuse me, it didn't. Leave got up. The leave vote got up. And the Leave vote was headed by a politician called Boris Johnson. For those of you who don't know much about British politics, Boris is a very dynamic character. He's a great writer. He's got a touch of Winston Churchill about him. He's very flamboyant. He was mayor of London before he has had this life in politics. He was in Parliament before, and he's a real character. He writes beautifully, and he actually looks like he enjoys his life, which is the complete opposite of Mrs. May, who was the Grey Lady. She was Secretary of Immigration under David Cameron's government. And then after this huge turmoil and surprise, genuine surprise for the ruling class, that the Leave campaign got up, they started casting around for a new leader, because David Cameron, of course, resigned. He was gone. And of course, the obvious one to pick was Boris Johnson. But like a lot of, I guess, like Donald Trump, a lot of flamboyant. Not that he's anywhere in Trump's class, but he's a larger-than-life character. He's a wonderful speaker, wonderful, and within the Bullingdon Club, big drinking club. Anyway. Instead of picking Boris Johnson as their leader to replace Cameron, they went with Mrs. May, a complete grey lady, and just really, what did she have going for her? Well, very little. I'm sure she's a very nice lady, but she's wooden and no political appeal really at all. But they went for her, and she was one of the Remainers. She was a bit subtle about it all, but she certainly wasn't campaigning for the Leave campaign. So we finished up with Mrs. May, who really, honestly, has just been a hopeless disaster. And the EU, of course, is just a bureaucratic monolith led by ex-politicians, and God, not very good ones at that. Juncker, my, what a pain he is. Anyway, so really where the situation is now is Britain's been negotiating for a couple of years. It's got 4 years to negotiate through its exit from the European Union, and a lot to do with that, all the new laws from Europe that it's undertaken, all of its regulations, regulate everything from how many cows you can have to get the subsidy, which of course the French, that was their main reason for going into the European Union, so they get huge subsidies for terribly inefficient farms. Peter's saying we do with a couple of Nigel Farage cut through this BS political speak. That's right. Nigel Farage, I should have, Peter's reminded me. Thank you, Peter. I should have mentioned he was the leader of a very small political party, Independent UK, I think it was called. But he was the voice calling to leave Britain to leave the EU, and he was actually one of Britain's members in the European Parliament. But he's a real character. So now that they're leaving, the rest of the European Union, France in particular, and I guess this is their attempt at revenge for Waterloo, is trying to make their life as hard as possible. And Macron, this new French premier, says is quite open about it. You know, it's not easy to leave, and it's going to be hard, and we're going to make it hard for them. So typically, that's the thanks that the POMs are going to get from the French. There's long history between them. So this bit of whispering on, I'm going to get to it in a minute, came in in a forex pair, British pound and the euro. And on 20th September, Mrs. May took Britain's latest exit plan. It's called the Chequers Plan. Chequers is the Prime Minister's country home. I mean, it's grand, it's magnificent, in the UK. And she got a cabinet together at Chequers and came up with what's called the Chequers Plan. And 20th September, she presented that to the EU leaders with high hopes and great confidence. And she was absolutely slammed. Ambushed was what the papers were saying. They didn't like it at all, led, of course, by the French. The perfidious Albion, yeah, and they really slammed her. So this had caused all sorts of turmoil. Really the underlying problem in the ruling party, the Conservatives, the Tories in UK, is that Mrs. May is not a leaver. She's trying to get what they call Brexit light. She really wants to stay in Europe, and the plan, including this Chequers Plan, it's totally hopeless. And of course, Britain, like most countries, is really run by its bureaucrats, and you know, that's where the yes minister syndrome, they invented it, and all of the British bureaucrats are all solidly for Remain. Left wing, they'd probably read The Guardian. And the leading leavers, Boris Johnson and a few of his supporters, who are Mrs. May's real competition, they were so disgusted with this Chequers Plan that they resigned from cabinet. But anyway, she pushed ahead, and great confidence that this plan would be accepted, and that this would be very good for Britain. As you have a look at this euro chart here, you can see that the bar that I have, let me just bring it up on the other chart here, the bar that has the TO3 buy signal on it is in fact September the 20th. This is the very day that Mrs. May was taking this Chequers proposal to the leaders of the EU. And have a look at that bar. It's a down bar. It's closed well off its close. Not that that means a great deal, but so what? Well, the low of that bar was 88.48, and look at the Daniel code numbers underneath it. We had a blue line at 88.47. We had the black line, Webby's favourite invention, the black line at 88.47. And we had a red line at 88.51. So the first thing we need if we're going to get a market turn is target recognition. And the low of that bar, 88.48, is one tick, just one tick, 1/10,000th away from the black line and the red line, the blue line, I should say, and down it goes. So that gave us a TO3 buy signal for that day. And surprise, surprise, next day, headlines. Europe's not accepting the Chequers Plan, Mrs. May's ambushed, etc., etc., etc. So that would mean that it was better for Europe. Euro's got stronger, GBP's got weaker relative to the euro. But in fact, the euro was not just the euro GBP chart was not just whispering; it was roaring. Because if you look at this chart, you had your almost perfect target recognition, plus or minus. Here we've got one tick variance. That's all. And you've got the fast stochastic oversold, the slow stochastic oversold, and you've got a form of divergence on our proprietary momentum indicator. You can see the two lows, low right underneath that bar and the previous swing low. There was no divergence on that day to day, but there actually was divergence swing to swing, which those of you who've done a Daniel Code tutorial will understand. So it went from whispering to pretty urgent. This could be a really important buy signal here if it's elected, which it was. and off it went. And that is, the $1,500 trade for one contract. Good news for euro. That's how this was all being presented back on the 21st September. Well, what they're really saying, bad news for the Brits, bad news for the pound, means good news for euro, and away it went. But have a look where it went to. That first bar up had a high at 8995, and look at the Daniel Code retracement, 8997, 2/10,000th, 2-tick variance out of a possible 9,000 odd. Quite extraordinary. Perfect target recognition. The problem with this is that from a pure trading point of view, that doesn't set up a sell signal. That a big bar up of the 21st actually changed the trend. The trend at the close of that day was technically the trend was up, so that didn't generate a conventional price sell signal. But let's move on. So that euphoria only lasted for the day, and then you can see what's happened afterwards. Since then, the euro's plummeted down to 87.27 was the black line, the next black line, Webby, as you can see, and that particular low, which was October the 10th, a couple of days ago, 87.23, 4 ticks away from the black line. Incredible, perfect target, almost perfect target recognition, and of course that stopped the travel down. So after this burst of euphoria, see how excited they were by the size of that bar. I don't know, the majority of traders who trade this market, Europeans, they're very excitable, a lot of them, aren't they? The French are flamboyant people. The southern states are pretty flamboyant as well. And anyway, soon the perception dawned on them that this was not good news for the euro. This is not good for Europe, because the reality is that Britain and Germany are by far the two biggest economies in the European Union, by far. And Germany in particular, its trade with Great Britain is massive. And the euro, or the European Union, we sort of understand why it was formed. It's a socialist ideal, but one of the problems with it is that they have a common currency, the euro, but they don't have common fiscal management. All these different countries have their own central banks. But the euro has to be set at a price, and the price it's set at is far too weak for Germany, which compared to the old Deutschmark, which gives Germany a massive trading advantage because the euro is a weak currency comparable to Germany's economic strength, and much less than the Deutschmark would be set, Germany's old currency. Their products and services are comparatively cheap. Their currency is cheaper than it should be. They have that as a huge competitive advantage. The corollary of that, though, is that it's far too expensive for the countries that have weak economies, Spain and Italy and Greece among them. So you have this merged economic entity, but it has different financial settings because each of these countries retains their reserve banks or central banks, and the ones that are big enough and strong enough, which is basically France and Germany, they set the rules and everyone else has got to follow, which is why Italy's getting caned today. They got a new government and it's trying to be a bit independent, and their bond rates have gone through the roof, and European Union's saying to it today, no, euro bonds, whole-term, long-term problem. Yeah, and the EU saying to Italy today, well, get back into line, don't try to be independent, and budget for a deficit of that size. It's only about 2.3%, but who believes any of these figures anyway? And they're saying we won't support your bonds. So you have the Central European Bank buying. They have a merge. They have a European bank head by Draghi, even while the countries have their own independent central banks. So that's why long-term Brexit is not such a good idea, particularly for Germany. And if that's so, we should see that happening in the DAX. And this is Germany's DAX. This is, excuse me, the equivalent of the S&P. It's their broad market, small, it's a bit like the Dow. Germany's version of, and you can see there that September the 21st. Let me make sure this chart's changing so you actually are seeing what I'm talking about. Yes, you are seeing what I'm talking about, so that's grand. So this is Germany's equivalent of the Dow. This is the DAX. And September 21, the very next day, that was actually the closing high of this rally that the DAX was having from late September up. And that was it. Mid-September, I should have said up. That was the closing high. And look at it since then. Down, 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 down. It's probably going to rally tonight a little bit. So that tells the story of what's happening in the market and what we saw with that TO3 buy signal in a Forex pair. Actually told you a whole lot about what was going to happen short term, and the next signal told you what was going to happen medium and long term, and we expect to see that played out in Germany's stock market, which is what the DAX is. So great stuff, isn't it? So always watch the Daniel Code numbers. The big edge with the Daniel Code over any other form of trading is that markets turn at and only at these Daniel Code numbers. And you can see I've been through them. We were one tick off in the September low. That low was 88.48. Then that big rally up, the high that's on September the 21st, the high of that was 89.95 against the Daniel Code red line at 89.97. Down it went, straight through the old support and down to the next black line, 87.27. And that low was reached on Wednesday's low, which was 87.23, 4 ticks through that number. So that's the joy of the Daniel Code. The numbers tell you that markets will turn and only turn at those numbers. Now, the quandary after we had that huge DC buy, TO3 buy, in September, which is this bar right here, this is the 21st September bar, is that because that changed the trend to up, it didn't create a new sell signal for us. But we had a time sell signal created by that very bar, that big bar up. It came on a Daniel Code time buy signal, and it created a sell signal in time right on that high. Next day was an inside bar. Next day, the down bottom of that inside bar was elected. That tells you the time signal's bitten, and down it goes. One little rally, which failed, and then down it goes into last Wednesday. So time signals are just so important because they tell us the things that price on its own doesn't tell us. Okay, so let's move on with our idea of market whispering, that markets are trying to tell us something. This is the 6-day chart of the S&P E-mini. You've seen this chart many times. I show it to you regularly. And have a look at this. We had a expiring time signal, 89. That's the black line in price, and it's also a black line in time. We had that expiring last week. And have a look where the high came. That Daniel Code trading channel you can see on there, the blue lines, then leading into the dotted red lines, we ended that in June. it hasn't been increased since June. It locked on those settings in June. Here we are now, September. Look where the high in the S&P came this time. Just pushed and pushed and pushed and ran straight up to that dotted red line, which is one standard deviation from the mean. It's actually one Daniel code standard deviation from the mean, which is not your normal mathematical one SD. And that's what stopped it. Just hit its head on the that angular level of resistance, and that's it. So that was a very important piece of whispering, and that then got me looking more into this particular phenomenon. Now, this is still the 6-day chart. This is the equivalent of a Daniel code week. 6 days as a Daniel code week, and there are reasons for that. But have a look at this chart. We're starting from the August, little small low in August, but that's actually a low before the low that we got in October. This is 2016 we're talking about, incidentally. And from that low, 59 weeks, 59 on the main DC number, 59 on the 6-day chart, that gave us the February high. Fantastic, wasn't it? Let me just get you up to date on that, if I can, by showing you the, or I should say rather by giving you the dates. Here we are, stand by, here we are. So, yeah, February, that was the week ending February the 1st, gave us that high. That's what led to all the volatility after, for the next few months, actually. The volatility continued into April. Fantastic. We loved it. I've talked to you about those trades. So that was a 59 cycle from a low before the low into the high. Now, that's not the crash cycle. The crash cycle is high to high on the first hop. This is not the crash cycle. But having seen the 59 work so well at that high, we then have to ask ourselves, what's next? And we know that the Daniel code, all these time cycles, come from the book of Daniel. It says, it shall be for time, times, and an half. So, if Terry's listening, he would try to tell me that was not grammatical. Well, no, it's not, but it's from the book of Daniel, mate, so we'll concede, shall we not? And all of these time cycles come from the book of Daniel in the Bible. It shall be for time, times, and an half. So if time has worked, if the 59 worked so nicely from a low before the low at that early February high, that was time, that's 59. The next cycle is and an half. So the next cycle is 89. That's 59 and an half. And that ended at the end of last week. That was the end of it. So we can see that whole cycle ended. Let me get the ES up instead of the SPX. And I can tell you, here we are, that whole cycle ended on October the 3rd. That was the end of the 89 cycle. Time, times, and an half. Pretty extraordinary, isn't it? And look where it ended. Look where that high is. Right at the old extension of the Daniel Code trading channel, which we stopped updating in June. April, May, June. Yeah, looks like we stopped updating earlier than that. We probably looked like we stopped updating that in March. And here we are, September. And the extension of that DC trading channel has given us the high again. This stuff just blows me away. Nobody is more amazed by the Daniel Code than I am, but I hope that some of you are seeing the sort of amazing things in here that I'm trying to highlight for you. Okay, so that was good. So now I want to tell you about Prince Daniel's very good week. Now, those of you who had a look at the website lately will have seen this post, which Prince Daniel put in a forum, and I thought it was so nice I put it on the front page for you. And Prince Daniel, he won't be with us now because he's in Dubai. It's the middle of the night. but I know he'll watch this tomorrow, is a very, very interesting gentleman. He's just finished doing his Daniel Code tutorial, learning about time. And like Peter King, who's with us today, who's a demon short-term trader, Prince Daniel is a dedicated short-term trader. And he came to me to learn how to trade time, which we do off daily bars. And I've managed to convert him. He's still using his short-term techniques when he's in a counter-trend trade, but he's now learned to hold trades, when to hold them and how to hold them. And this was his post he put up on the front page. What a day it's been for the Daniel Code, 5,000. Well, you can read it all yourself. S&P 2000, crude, gasoline, heating oil, all that on one contract. So he's a very happy guy. And he's an interesting man. He's got his businesses are based in Dubai, and but he takes his annual leave. He goes off to Spain and France and all the places you'd like to be going yourself. And a very successful businessman, a very successful trader. And he came to me as a successful trader, and he's just got so much better by learning about trading time with the Daniel Code. So I put this quote from Dan, which is actually the biblical abbreviation for Daniel, the book of Daniel, chapter 12, verse 7. And I heard the man clothed in linen, which was upon the waters of the river, when he held up his right hand and his left hand unto heaven, and swear by him that liveth for ever, that it shall be for a time, times, and an half. And that's where all this time trading comes from. I know a lot of people get offended when I say that, but that's the reality, and that's where all these concepts of time trading come from. So we'll look more at Prince Daniel's very, very good week. Have a look. This is what he was talking about. We had a time sell signal on the S&P. It's now worth 7,250 per one contract. He had a very good trade in crude oil. That was a plus signal, as well as a time sell signal that set up in that little rally 3 days ago. So, of course, the trend was down, one bar up, 1 bar counter trend, sell the low. That's 3,150 to today's close. This is Prince Daniel and the gasoline trade. This is a market I trade a lot, and I recommend to him that he trade. We had a time sell signal on this market back last week, and look where it's got to. $5,240 per one contract with no counter trend in the way. And this is Prince Daniel and the heating oil trade. Pretty easy. A time signal. It was a time sell signal on Tuesday, and $2,490, $2,500 straight down. Very nice. This was our 6S or 6 seal signal on oil. Folks, I don't know how many of you are following the 6 seal, but I've been doing it now for about 6 or 7 weeks. It's free at the moment. You just have to be registered at the Daniel Code. Just your name, details, email. Get yourself registered. The 6 seal signals are free. And this is what it did for us on oil. You can see I've just been looking at the last trading for the last few days. You can see that we've been with every turn in this market. This is 6S on the S&P E-mini, and look at that sell signal. Let me get the chart here. Here we are, sell signal. We want the dailies. Yeah, there's the sell signal on October the 3rd. Down it goes 1, 2, 3 days. Little buy signal, counter trend for October the 9th. It failed. And then straight back into another sell, the bar of October the 9th itself. set up the next time sell signal. Down it goes, 6,400 into today's close, which is why I thought you'd all be exhausted from counting your money today. Here's the Success and UST bonds. Have a look at this. Buy, sell every single turn. 2,400 for the last run down, 1,800 for this rally. Not a lot of work, just get the Success signals and put them on. Okay. Fiona. Can Daniel Code time signals work for intraday? Fiona, I'm sure they do. In fact, I know they do. I don't trade intraday anymore. I used to. I've traded everything from 3-tick bars to 3-minute bars. You think of it, I've done it. The big money is made in trading the daily bars. But yes, in answer to your question, the time signals will work on all time sequences. You know, whether you, I have a lot of fun with 2- and 3-day bars, and 6-day bars, and 12-day bars. But yeah, it works exactly the same intraday on any time period you want, and that's because they are genuine time signals. And you know, if you think of time as a circle, look at a clock. It's a circle. Any one of those sequences going around, minutes, seconds, what have you, they're all valid fractals of time. And that's exactly what the DC time signals are. They're fractals of time. So yes, it all works exactly the same. This is the Dow, folks, which has been enormous and on trading time. And of course, time is more important than price, because time fills in the gaps between the price signals. The price signals at most turns are perfect, following the Daniel Code rules, but time fills in the gaps between them. So this is a time chart for the Dow recently, and you can see we've had one failure. We had a buy. Put a little cross on the chart. It says fail. That buy signal failed. That's the only one that's failed. And this chart's the part I've put together to show you starts on the 17th of September. We've had one failed time signal since then. The others total about $11,000 plus something or other. So if you're trading the Dow on time, you've had some part of that at least. It's been pretty sensational. This is the Russell 2000 now. The new chart, the December monthly chart, for this market was horrendous when I first posted it, just dots and dashes. This market used to be run by ICE, the other exchange, Intercontinental Exchange, and they ceased running this market, and it's been moved now to the CME, and this is the small caps market. This is the small caps traded on the New York Stock Exchange, and it's a very, very good trading market. Don't be frightened by the lack of back data, because you'll find that in the 057 contract. But there was a time sell signal, and then we've had a lovely 1, 2, 3, 4, 5, 6 days down for $5,000 per one contract. Enormous. Incidentally, those of you who've been trading equities will notice that due to the volatility in February, the margin for the S&P and the mini Dow, mini Russell, all of them has gone through the roof. And the margin on the mini S&P now is about $6,000, which is ridiculous. But it's that way because of that volatility and the way the margin is calculated. Don't forget, the exchange is responsible for all of these things on the market. The CME and NYMET, the other ones, they're largely now owned by institutions, but the institutions are controlled by brokers. And everything that the exchanges do, they do for the benefit of their members, their brokers who are their members, their prime clients. They don't do it for your benefit or mine. So it's always in their interest to have a bigger margin. And with the bigger margin, it gives the more security for the trade, because your margin's deducted from your account when you go into a trade, and you can't trade without margin. But the way it works because it's calculated over a very long period, in my view, a fairly long period at least, of the trading. The minute that volatility hits, boom, the margin explodes. But as long as those figures of the big volatility, well, we've got volatility again now, but this is the first volatility we've had since early February, those numbers are still in the mix, which is why that margin hasn't come down. So that's too big for most traders, those margins. So be prepared for the CME to introduce a new mini S&P contract with a probably something around a $3,000, $3,200 margin. That should be coming quite soon, as I understand it. And if that happens, you'll see the same thing in the Russell, the NASDAQ. They'll all follow suit. So there you are. That's the news from, that's the unofficial news from the CME. So there's your time signal on the Russell. So I hope you're getting the idea of how important these time signals are. And that's primarily what I teach you at Daniel Code Tutorials. Teach you to create them for yourself. Someone rang me the other day and said, what happens if you're not around in the future? I said, well, you're doing a tutorial, so it won't matter to you, because once I've taught you to trade time, Daniel Code time signals, you won't need me anyway, which is a nice thing for them. And that's as it should be. This is Forex. I concentrate a lot on futures in these webinars, and I shouldn't. I used to trade Forex, and just Forex is where I started off with trading. And then over many years, I traded futures and Forex. And personally, now I'm much more interested in futures, which is why I use them for a lot of our examples. But we still cover Forex. We still have a lot of clients who trade Forex, and it's just the same. It's identical. So have a look at this lovely trade. This is the Aussie dollar, US dollar trade. And this has been a subtle way of the market whispering at you. And that's because have a look at this really strange bar, the big bar up. September the 26th, that's the bar that's got the plus sell signal on it. And if you see it, and I put a dotted line above the old high, which was September the 21st. And then you had this unexpectedly big rally on September the 26th. And for those of you who are members and look at the Daniel Code charts, that high, there was a blue line at 7316. And the high of that bar was 7315. That's how perfect target recognition is. And as well as that, of course, so that gave us a plus sell signal. And it was also a Daniel Code hook trade. And you can see that the high of the bar on September the 26th, that's the one that's got the red triangle on it, was just a few ticks above the high, the old high, which was September the 21st. That high was 7304. The next high came at 7315. It went through by 11 ticks, just enough to get all the stops. So everybody who was short got whacked on the buy side there. And now that there's nobody short any longer, or only us Daniel Code people, it's going to be, it gives the reward when it's good. Got everyone at the stage of saying, I'm not going to trade this rotten market. That's when markets give you the rewards. And the quickest way to find it is from that trade there, which is called a false break. Fast moves come from false breaks. You'll see that. Look at charts, try and train your eye for that. It's the move that just takes out the old high, enough to grab all the stops. Doesn't mean it's not going to go higher, but the imperator is if the sell side of that trade is taken out the next day, the probability is it will be a better than average trade because it's got the mugs wrong. And you can see with this pretty simple, that was a plus sell in the TO3 plus signals. And you can see pretty simply $1,500 odd straight down, a minor counter trend that didn't get elected, which is interesting to think about that because have a look at that bar. This is October the 2nd. That's this bar right here. So here we are. The bar before was an inside bar, and at the website, what I say and teach people is, if you're trading the high or low of an inside bar, don't trade the high or low of the inside bar. Trade the high and low of the last bar before the inside bar that was not itself an inside bar. That's a much safer way to trade. Once you get on to doing a Daniel Code tutorial and trading time, you'll understand which of those inside bars to apply that sort of rule to, and others, of course, where you have to just take the high low of the inside bar because the alternate, the risk is just too large to contemplate. So think about that, and down it went, 1500, very nice. What stopped it? Well, there was a Daniel Code blue line on the charts. 7046 was the blue line. It's not on this chart, that's on a different computer. 7046, what's this low here? 7047. The closing low of this move, one tick away, one tick out of 7,000, one tick out of the Daniel Code blue line. Then 3 bars later, we get that down-facing outside bar. It went down to 7044, but couldn't close below there. And then, of course, today's inside bar, it's low 7044 as well. Okay, so Forex is just the same. This was a plus signal, plus TO3 plus signal for you, and it was also a time signal as well. This is another Forex chart I want to show you. This is all exactly the same. This is the Canadian dollar Japanese yen pair, and we had same thing here in this chart. We had a DC black line at 88.982. Let's have a look at that one, CAD JPY. 88.982. You have a look at the high on the setup bar, which was October the 3rd. That closed 88.96 against 88.98. Amazing, isn't it? How markets find these numbers. They're like magnets to markets. And that actually set us up for a TO3 and the blue line sell signal. Straight down, the one counter trend on the outside bar didn't get elected because of how we trade the inside bar rule here. I don't think it was a very, very small little rally anyway. The inside bar day was 87,457 high. It went up to 87,458. No, it didn't get elected anyway. We use a 5-tick buffer, as you know, in Forex. Didn't get elected. So straight down, $2,200 straight into your account. What could be nicer? So it's been a hell of a week, folks, hasn't it? Now, Fiona, yes, thank you. All signals, the TO3, the plus signals, and the time signals, they're all created at the close of the bar. And if you're a short-term trader, you'll be anxious to make that happen a bit earlier. But the concept of trading is that it's not our job to be right. I know it seems like that. And, you know, if you're right all the time, you'll make money. But that's the whole point. Our job is not to be right. Our job is to make money as traders. That's our business, is making money. And the most money is made from trading daily bars. But you know, having those short-term trading skills, if you are a short-term trader, you'll find it immensely valuable when you're trading the counter trends in the Daniel Code, both in price and in time. I know Prince Daniel, who is a very, very good short-term trader, he's making money on the counter trend signals where the success program's waiting for the trailing stop to be hit. So if you're a short-term trader, that's a huge skill to have. Do a Daniel Code tutorial and you'll be one of the elite traders in the world. Okay, this is the NASDAQ talking about markets whispering. These are the little things that the market's trying to say to you. Have a look at this. This is a chart you've seen many times because we stopped updating this red line. The red line was actually ended in early July. Hasn't been moved, hasn't been touched. You've seen this chart. Here we are, September, July, August, September. Might have even been late June, that high. Here we are, July, August, yeah, three months later. Look where this latest high came. Right on the fourth seal. That's a fourth seal line. That's a line that comes from a low before the low and meets the other qualifications for a fourth seal line. It's also actually a fifth seal line as well, which just makes it stronger. But that's what stopped this move in the NASDAQ. And 40% of this whole move up since Trump's election in the NASDAQ at least has come from the big companies buying back their shares, share buybacks. 40% of all that money is from share buybacks now. They can't do buybacks within 31 days of the time they're due to release their results. So all that buying power has come out of the market, which may be something to do with why this market's getting pretty slippery right now. So looking at the NASDAQ, which has been the driver, you can see it's down to one of those dotted red lines, which happens to be the one it's got down to is 3 standard deviations from the mean. Daniel Code standard deviations from the mean. It's been trading above 4. Impossible. It just can't stay there. And it did for a number. This is a 6-day chart. 1, 2, 3, 4, 5, 6, 7, 8, 9, about 11 weeks, 12 weeks it stayed above the 4th standard deviation from the mean. Pretty much unheard of. When that happens in commodities, it's a sure sign of a blow-off top. And it doesn't last long. What's been so impressive about the NASDAQ and the US economy generally is its strength, the way it just grounds on and on and on and on. It's fantastic. So anyway, we're having a little correction now. and as the late, great Rene Rivkin used to say, Australians will know who I'm talking about. He was a very flamboyant character, Sydney stockbroker. He used to get himself on television a lot with his worry beads and what have you. And he had the classic answer when someone, this might have been in the 89 crash if I remember rightly, or even the 2000 crash. He was still alive then. Rene, what's the difference between a correction and a crash? Oh, well, he said a correction is when you lose your money. A crash is when I lose my money. So I guess depending on whether you're long or short, we of course were right. We were short and made tons of money. So as far as we're concerned, this is only a correction. What happens going forward? Well, I've had clients, one of whom's with us today, saying, you know, what do I do about my investments, my pension investments, stocks and what have you? Is that the end? Is it all over? Well, no one can say that, Sue, but what I did say to you is it certainly wasn't at the time, which was a few weeks ago. I said we need to see some big down bars in the NASDAQ to start to get any feel that this massive rally in US stocks is coming to an end. But it's been a great bull, but it's an old bull. Like some of us, me included, age marches on, doesn't it? Girls don't look at you so much these days. In fact, once you get grey enough, you become pretty much invisible, men and women. Anyway, there we are. That's that. That's grand. I hope you've enjoyed that. I think that's pretty near the end of our presentation. Let's have a look. Yes, if you want to be a super trader, I've got about 7 slots left between now and December. So if you want to do a Daniel Code tutorial, now's the time to do it. And I will teach you all of the everything I know about trading price and all of the mysteries of trading time. You will never miss a turn again. How's that for a statement? How's that for a statement? There we are. Let me know. Send me an email, and if you'd like me to call you and have a talk to you, jneedham@thedanielcode.com. jneedham@thedanielcode.com. Send me an email. Let me know where you live. I'll give you a call. We can chat about it if you like, or if you're ready, Tom, to do it, just shoot me an email saying I'm ready to go, and we'll get you slotted in. We can get you into becoming a super trader before Christmas. with the Daniel Code video tutorial. Okay, what's next? Nothing. That's it. We have free trials, folks. A lot of the stuff on the website, all the 6S signals are free at the moment. You just have to register. Click on the registration banner at the Daniel Code website. I'll show you that in a minute. And you can look at the 6S signals every day. Once you register, Terry will be happy to give you a free trial of everything on the Daniel Code website. And if you're new to trading or haven't used Trade Navigator software, hey Mike, good. I can arrange for you to have a free 31-day trial with them. This is our compliance statement. Always important that you're aware that you can lose money very quickly trading. In fact, most people lose all of their first trading bank in the first 90 days. I reckon they lose it in 30 days. So for goodness sakes, take some time and learn the Daniel Code trading as much as you can before you start trading. Those of you who have done tutorials, of course, you're elite traders. You are actually aware of what these risks are, and they're significant. I got an email from AMP today just reminding people about what the limits are that markets are allowed to move before the exchanges suspend trading. So I guess they at least want to refresh your memory about that. Okay, that's us for the day, folks. Let me see if there are any interesting questions here. No, everyone's happy. Everyone knows everything they want to know. Yeah. Good, Kevin. Good, thanks, mate. Good to have you with us, and Mike, of course. Anything else you'd like to know, folks? Drop me an email. Good on you, Tom. I'll be over. I hope you're dry where you are, mate, or at least not getting flooded out. I know Tom's down in Florida. A terrible time they're having down the south there. Be good, folks. Enjoy yourself. And it's Friday afternoon for me, so I put my orders on. I'm off. What's John saying? It's Chris using the 151-minute charts. Good on you, mate. Yeah, John, enjoy the Bloody Mary. Yeah, it is Bloody Mary time right now. Peter, drop me the silver. Okay, Pete, I'll do that. If I got your email, shoot me an email, would you, Peter, please? jneedham@thedanielcode.com, and I'll shoot you a silver. We can have a yarn if you like. Dick Brewster, God, there's a voice from the past. I haven't seen you for so long, mate, and Kevin Coyne as well. Lovely to have you guys with us. You've been with us for years and years and years. It's just great to see you. Okay, all the best, folks. See you next time. Bye-bye now.